So today we are going to discuss about top mistakes which made by investor in their investing journey. So let's dive into the video. So first is all about investing without research. This is the main concept you must take into consideration before investing in any stocks. For instance, even I have invested blindly in many stocks that my friend suggested and any other person in randomly from YouTube, Telegram. So this is a major mistake in which every investor must avoid in the first place because before investing a single penny into a stock, first analyze the fundamentals of the stocks and its growth all must be taken into consideration and what all the revenue it has occurred and what is the growth rate and what is the profit ratio. It must all be to be taken into consideration before investing an amount into any stocks. Even Warren Buffett has mentioned that in his video, even a single stock can make you richer or it can pull you down. But before investing, you must fundamentally analyze how the business model and what it is and how it earn money. This must be taken into consideration before investing in money. So the second thing is all about panic selling. Panic selling is something in which a market falls rapidly and the investor, started selling the stocks which he have bought. So this is a major mistake which is committing by the investor. So it must be corrected in the first place because even though the market is falling right now, the market will rally up again in the future. So if you have analyzed the fundamentals and the uh, growth of the company, even it is short time volatility cannot affect its long term validity. So before investing, just consider whether you are going in a path of short term or in a long term. So the next one is putting all eggs into the same basket. This is something very interesting I came across because my friend uh, has advised me to not to throw all eggs into the basket. I first wondered, what is it? Why is he saying this? Then I have made my research and finally understood the main reason behind what he was mentioning. So, throwing all eggs into a single basket means buying same stock from your portfolio and maintaining it is something which is dangerous in nature. For example, let's assume I buy a company X stock in 10,000 rupees, which is the total portfolio of my investing. So now, if a single crackdown happens, my stock crashes to 50%. So I lose more of this money. But when you diversify in the form of gold, silver, bonds, equities, and debt funds, this will protect your portfolio and it will help you to grow your asset in a free way. So the next is all about investing money you cannot afford to lose. So this is a major concern to be taken into consideration is that when you use the money which is used for emergency fund or loans or you use the borrowed money to invest in this dangerous market, it is an dangerous and volatile market will easily abbreviate your capital. So, first of all, you must allocate a separate fund, which is said to be an emergency fund, which I have already mentioned in the previous video. So, just watch it before you invest. And then the last one is all about following the herd, which is something when anyone suggests that please buy this stock or please buy this stock. So please make sure you are going to be in a trap way, because why I'm saying is that when someone says that you buy this stock, you buy this stock or that stock, it is a manipulating of the market, and many of you started buying the same stock in which the price of the equity or the share keep on rising. At the final level, those who bought in the cheap will get sold at the top, and the market will suddenly getting into crash. So this is sometimes a domino effect. This must also to be taken into consideration. And there is a one more bonus tips or mistake you must avoid before entering into the market. So stop letting your emotion flow or drive your decision. This is a crucial part in investing, because the market's volatility is itself in a dangerous and volatile and very rapidly changing manner. So when you blindly and let your emotion grow and it drives your decision, you just panic sell because your portfolio just got turned into red. So before, just stop your emotion before investing and let it grow. So that's it, guys. That's it. Thank you for watching. Please subscribe to Sahosala and thank you.